Canadian home prices are going to fall again this year, and starting next year, experts expect them to begin climbing back. That's not my opinion, that is the combined outlook from the Federal Housing Agency and one of Canada's big five banks. The same bank whose economists called the top of this market in 2021 when everyone said he was wrong. Now, this forecast isn't the valuable part. The valuable part is the reasoning, because once you see why prices fall this year and why they potentially start turning around in 2027, you will be able to judge the market yourself instead of depending on anyone's prediction, including this one. So let's get into it. First, you need to see how deep this correction actually is. Between April 2020 and February 2022, the typical Canadian home price rose by around 56.7%. And since then, they are down around 20%. Every gain back to early 2021 has been erased. And here in the GTA, it's harsher than that, where the price of a typical home is down close to 30% from its peak. Now, if you think that's the bad news, it isn't. 20% is the number on paper, and the number on paper is hiding something. Adjusted for inflation, the fact that everything else got more expensive while homes got cheaper, and the real decline is materially bigger. Big enough that Canadian homeowners have now gone close to a full decade with zero real price appreciation. If you bought 10 years ago, then your home buys roughly what it bought the day you got the keys. So how rare is a correction of this size? Well, you have to go back 35 years. The 1990s cycle is the only comparable episode in modern Canadian history. And the terrifying part of that story is not the crash, but the recovery. Because after the 90s peak, it took more than a decade for Greater Toronto homes to get back the buying power they lost. An entire generation bought at the peak and waited a good part of their working lives to break even in real terms. That's the benchmark the professionals are measuring today against. So when I tell you they expect a recovery to start in 2027, understand how bold that call actually is. And this raises an obvious question. Why are prices expected to fall in 2026 and then potentially start recovering next year onwards? The answer is a collision between two forces. Force number one hits this year, a wall of homes for sale arriving from three directions at once. Direction 1 is sellers who tried to sell over the past 2 years and couldn't get their price, so they decided to pull their listings and are now coming back in the market. A lot of them are investors who are simply done waiting. Direction 2 is new construction. Projects that broke ground and started construction during the boom are finishing right now, and new completed homes are becoming available in an already soft market. Direction 3 is mortgage renewals. A huge wave of homeowners who locked in pandemic-era rates comes up for renewal this year at a much higher payment. Most will absorb it, but some cannot. And the ones who cannot become sellers, whether they like it or not. Now let's flip to the demand side, because here's where it gets worse. The engine that powered the boom has been switched off. Canada's population actually shrank through the back half of last year as temporary residents came down. Now you might be thinking, so what? Temporary residents don't buy homes. You're right, they don't, but they rent them. And that surge of renters is what kept rents climbing. And climbing rents are what made the investor math work. And investors were a huge share of the buying. Pull the renters out and the rental market softens. The investor math breaks and a big slice of purchase demand disappears without a single buyer moving out of the country. A near zero population growth is expected for the next 2 years. And underneath all that, the millennial generation, which was the largest group of buyers over the past decade, are now at their demographic peak for purchasing homes. And every year from here, that group gets a little smaller. So we have a rising supply and shrinking demand. Back in February, the ratio of homes selling to homes being listed was the weakest for any February in at least a decade. Since then, exactly what the forecast expected has started happening. Sales have climbed for 3 straight months as bargain hunters step in, and the national price index just went flat for the first time in a year and a half. Sales are recovering and nationally prices are going nowhere. But underneath that national picture, prices are still falling in one place: Ontario. It's one of the weakest markets in the country, and GTA's average price is expected to drop again this year. In fact, the picture has darkened since the start of the year. The Federal Housing Agency updated its forecast just days ago, and it now expects the national average price to fall this year too, before modest growth returns in 2027. Now, while everyone is staring at falling prices, something interesting is happening. New construction is slowing down. Housing starts in Ontario are dropping to their lowest level in nearly 20 years, and 2026 marks the 5th consecutive annual decline. Condos in Toronto are usually sold before they are even built, and those early sales have crashed to their lowest levels in decades. Without those sales, builders cannot get the loans to start construction, so projects are being delayed and cancelled right now across the province. Now think about what that means with a 2-year lag. A home that doesn't get started in 2026 is a home that does not exist in 2028. So run the timeline forward. The returning sellers slowly sell, the renewal wave washes through, the completed buildings slowly fill up. Meanwhile, the economy is expected to improve from 2027, and if the trade pressure eases, then confidence comes back and incomes start to grow. All of this potentially leads to some demand recovering. And when it recovers, it arrives at a market where the construction pipeline has gone quiet and a slightly tightened inventory is present. Thin supply meeting even ordinary demand is enough to put a floor under the prices and start pushing them up a bit. That is why the forecast turns. Both the Federal Housing Agency and the banks expect price growth returning to 2027 and continuing through 2028. And just to be clear about what kind of growth, modest at best. Single digits, not a boom. So here's what this means for you. If you're buying, understand the position you're in. You're negotiating off actual comparable sold prices in the neighborhood, not the asking prices. And you're negotiating with sellers who are competing with a wall of inventory. The gap between what sellers are asking and what buyers are paying is wide. And in a market like this, it's more likely the ask comes down than the bid goes up. That is the strongest position buyers have held in years. But it isn't permanent because it lasts only as long as the excess inventory does. Now, if you're selling instead, then the data is blunt. Homes priced to actual recent sales are still selling, and they're selling faster and with fewer discounts than the ones that start high, sit and cut prices later. And now here's the part that matters more than this forecast itself. No forecast gets the timing exactly right. Not the banks, not the federal housing agencies, and these organizations would tell you the same, which is why they publish their reasoning and not just their numbers. And the reasoning is the part that you can potentially rely on. Too much supply now, potentially too little supply later. The dates can shift, but the mechanism doesn't. So use this the way it's meant to be used. The forecast tells you the shape of the next few years, a soft stretch, then a slow climb. What it cannot tell you is whether you should buy today or not, because that is not a market question, it's a math question. Does the payment work on your real income at today's rates with your savings still intact after closing? Would you still be living in the home you buy 5 years from now? If the payment doesn't work, no forecast can fix that. Buy when you can afford to, not when someone calls out the bottom. The forecast gives you the map of the market. What you need is your own route through it. And if you want to build that roadmap with me, that's literally what I do. I've closed over $25 million in real estate transactions here in the Greater Toronto area, most of it helping regular families work through exactly such questions. My calendar is open and the link to book a call with me is in the description. And it's a straight conversation. If the right move for you is to wait, then that's what I'll tell you. But if you're earlier in the process, then there's a recorded webinar that goes deeper on getting ready to buy. The link to watch it is in the description as well. If this video changed how you see the next 3 years, share it with someone who's been trying to decide whether to buy, and it might help them too. Thanks for watching, and I will see you in the next one.